Hello everyone, welcome back to Upside Down Data. Today I want to talk about HBAR and why I believe Hedera Hashgraph needs proxy staking to make HBAR more resilient to downtrends in the market and more explosive during upswings in the market. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. Okay, so before we get into the discussion on proxy staking, I just want to give some context about what our risk indicator is making of HBAR's current price action. So our risk indicator is the upside downside potential indicator, and what I'm showing you here is the price action of HBAR over time. Each dot is a day. Each day is color coded based on the output of a risk indicator. 5 is high risk, red. -5 is low risk, dark green. And what you can see is that coming off of the all-time high that HBAR put in earlier in the fall, we've kind of had this consolidation, and now we're really correcting down along with the rest of the crypto market. And in fact, the risk level is falling to levels we haven't seen since the summer, or even back here in this downtrend before we put in this big explosive move to the upside. So risk is now quite low for HBAR. But what I kind of want to talk a little bit more about is why is it that HBAR has been correcting so extremely recently, and potentially even more kind of extremely than some other crypto assets? And are there things that HBAR could be doing that might actually be helping it to be more resilient? Are there things that could be added to the network that would be helping? That's what I want to talk about today. So you can see here the risk level is quite low for HBAR, which means that from a historical perspective, according to the model, this is a pretty low level for HBAR to be right now. That the model thinks this is it would be surprising to the model if HBAR were to correct down further, but it could certainly happen. And another thing that's important to say here is that, we're nearing -4. We could end up hitting -5. The way to interpret -5 is not to say that it can't fall further once it hits -5. That's an important caveat to say with these models. Essentially what -5 means in the context of the model is that's the lowest risk the asset has ever been. And so it would be historically surprising for it to get to a lower risk point. It would mean that the asset has now redefined what it means to be low risk for it. But that doesn't mean that can't happen. It might be really unexpected based on the history of the asset, but it's not impossible. And so if HBAR keeps on correcting, we very well could hit -5, and the model might actually have to recalibrate what it thinks as being the lowest point for HBAR. That would be a super surprising point. It wasn't expect HBAR to fall that far, but this is crypto. Anything can happen, and so the model would just learn from that if it does happen. So, of course, we'll have to wait and see what happens. It could be that HBAR is able to get some rally soon that kind of pulls it back up, that's able then to stabilize the risk at a bit of a higher level. But it'll be interesting to watch that over the coming days. And it is possible that HBAR will kind of redefine what its lowest risk point is. It'll redefine how much downside potential is possible for it in this point in time. The model would find it surprising to fall below -5, but it certainly could happen. It could kind of redefine what that low risk point means. And I think something that sets up what I want to talk about next is this just observing how HBAR right now is the lowest risk asset of any of the 22 that we are currently following, right? There's some others that are close, the -3s, but it is the lowest risk asset right now. And so what I want to talk a little bit more about is how did this happen? How did HBAR correct so far, and even to a greater degree than these other ones? How is it realizing so much more downside potential in such a short amount of time than these other assets? Because I think HBAR bulls would say that they're believers in this project. It doesn't really make sense to an HBAR bull why HBAR would be correcting so precipitously like it is right now. You would have hoped that HBAR would be more resilient. So what I want to point to as maybe one thing that might be contributing to this kind of weakness that HBAR is showing right now is something to do more from fundamental perspective, something that I think HBAR or Hedera Hashgraph as a network is missing and that I could really use. And that is this idea of proxy staking. So I'm going to switch over here to the browser just to talk about some things. So what I'm showing you here is the roadmap for Hedera Hashgraph just on their website. And one thing that happened that I personally was kind of saw as unfortunate, I was a little bit disappointed in, is that in Q4 of this year, so of Q4 of 2021, for a while, this is when the development team was planning on instituting proxy staking. If you're not familiar with what proxy staking is, it's basically Hedera Hashgraph's version of delegated staking for their proof of stake network. So basically the idea that if you hold HBAR, you could then proxy stake it with a validator who's running a node within the Hedera network, and then you would get some slice of the rewards that validator receives for processing transactions and all that kind of thing. And so a lot of other proof of stake networks already have this working. They have systems in place where you can delegate your tokens to validators and earn yield based on it. Hedera Hashgraph does not have that yet. And it was something that was planned for this quarter, but it actually ended up getting pushed back, and not only pushed back a little bit, pushed way back to currently now it's slated for Q2 of 2022. So we're going to be waiting a while for proxy staking. And now I'm sure that the development team had a good reason for why they wanted to do this. But one thing that I think is kind of unfortunate for HBAR, maybe more in the short term, is I think this might be contributing to why HBAR is showing such weakness right now in this drawdown in the market, why it's corrected so heavily, so quickly. And just to put this into kind of context, if you look at other networks that have delegated proof of stake systems in place right now, you can just look and see what kind of yield that you can earn on those just by simply holding the asset and staking it, which is a pretty low risk way of earning yield in crypto. So I'm showing you, for example, Polkadot. I'm just on stakingrewards.com, which can help you kind of simulate how much you could earn. I'm just using it. Their defaults here just to show different ideas here. So there's an average yield for Polkadot when you delegate your tokens in their delegated proof of stake system, around 14%, a little below that. And so if you had $1,000 in Polkadot, you could then earn about $140 a year just passively holding it, just holding your asset. If we look at Elrond, Eagle, about the same kind of yield. Atom, which has a bit of a lower rate, still over $120. Avalanche, around $100. Solana, $63. And then Cardano, which has quite a bit lower rate, $56. Algorand, even lower, $46. But what I think is important to note about this here is that this provides utility to holding these assets beyond just hoping that the assets go up in price over time, right? If you're holding Polkadot, you're earning yield no matter what happens to the price. And in fact, here, if we flip what the prediction is of the price, even if Polkadot were to fall by 50% over the next year, you'd still be making $70 of profit just by holding it and staking it. And that's just guaranteed profit. That's just money that's going to come in, even in this kind of very bearish scenario where Polkadot, where the price of DOT would fall 50%. And, you can do that with any of these, where, if you say the price would fall, you're still earning money no matter what happens. Whereas with an asset like HBAR that doesn't have any of this system kind of in place to earn passive yield, you're just down however much money that is in unrealized losses. Obviously if you sold, it would become a realized loss, but otherwise, it's just down. You're not accruing any more HBAR just by holding it. Whereas with all these other systems, the more time you hold it, the more that you just have because you're staking and you're going to be accruing more of the asset. So if and when it goes on another big run to the upside, suddenly you just have more of the asset in your bag because you've been staking it, you've been earning yield, and just accruing more of it just passively with time. And so one of the things that I think is really useful about this within a token from a fundamental perspective is that in market downturns, like where we are currently right now, staking provides an incentive not to sell, right? It provides an incentive not to add to the selling pressure that's already existing in the market. Because if you believe in the asset long term, why would you give up the opportunity to just earn passive yield on it necessarily, right? And if you're not really sure when the bottom is, or if you're not really sure if we're in a prolonged bear market, why would you bother to sell if you think we're just going to come right back up? You might as well just hold, keep on earning yield, and be able to do it that way. And so that might be one reason why HBAR, which doesn't have that kind of reason to keep holding it, people might just say, well, will I hold HBAR during this downtrend? Or maybe I should sell my HBAR, move into either move it into just stable coins just to wait for the market conditions to change, or maybe I'll just sell my HBAR and buy into something like DOT or like Elrond or Cosmos, or Avalanche, where I can just earn passive staking yields. And then when the market conditions change, then maybe I'd switch back to HBAR when I think it's going to appreciate. But really in the downtrend, this is just giving a reason to not be in HBAR. This is giving a reason to be in a different chain where you can earn these passive yields. And the other thing I think is important to note about staking of what it does, beyond just the yield that it provides, is it just provides basically a friction for selling is kind of the idea. That it just becomes one more thing that you have to do, that selling you have to say is worth more than the yield that you're giving up by selling. And the other thing that's important to note, I think, with these is the idea of what percentage of the asset is currently being staked. So when you have a delegated proof of stake network, or in HBAR's case, it'd be a proxy proof of stake system, the idea is that when people stake, it basically locks up a certain amount of supply, right? For people to when people are staking, that's all kind of set aside. that's money they're not necessarily touching, and it leaves less supply that's just freely floating in the market that can be easily bought and sold really quickly, right? That kind of frictionless money that isn't something that you just had to take off of staking and then decide if you want to do that or etc. Kind of that friction-free money, and it'll end up being lower. So like Solana, for example, is around 70% of the total supply of Solana is currently being staked. And so that means that only around 30% of the supply of Solana is this kind of frictionless money that can easily be traded. And so then when we flip more from this downtrend kind of narrative where maybe the yield is the more important thing to keep in mind, even in an uptrend, staking can be beneficial, because what it'll do is if there's a sudden surge of demand for the asset, then it's really all that demand is going to be fighting over that frictionless money first, right? It's all that kind of money that's not being staked that someone is probably more likely to just want to throw on an exchange and just sell, that really that demand is fighting over, which could end up jacking up the price a lot more quickly than if the entire supply is that frictionless money where people might just say, oh good, I'm realizing some profits, or it's risen up where I have some unrealized profits. Maybe I'll sell some to realize some of these profits to gain some financial advantage here. And so really with HBAR, all of HBAR currently for the retail investor is kind of this frictionless money. You're just holding it, hoping that it appreciates in value. And so selling is the only way you gain money kind of on doing that. Whereas with these other assets that have a lot of their funds staked, people are earning yield on that staked money, and so they might be less willing to just immediately just go and sell that versus the sliver, the smaller percentage of the overall supply that's kind of that frictionless money that they'd be more willing to sell. And so in a sudden surge of demand, these chains that have a lot of the supply locked up in these staking mechanisms might see a bigger explosion in their price than something like HBAR, which doesn't have it. So again, to clarify, none of this is FUD against HBAR or saying that it's a bad project or anything like that. This is nothing against the technology or anything like that. Really what this is more just a statement on where I personally think that HBAR can't get proxy staking soon enough. I think that's going to be really important for the growth of HBAR, for its market cap, for its ecosystem, for a reason for people to hold it, to bring demand in. People want to earn yield. And if an asset doesn't offer that, the asset would have to have something else going for it to really bring people in, right? HBAR would have to be just blowing everyone else out of the water on other things to convince them that it's worth giving up on yield, for example, to go over into HBAR potentially. And, if you're an HBAR bull, you might believe that's already the case. You might think that the technology is so strong that people will be willing to give up yield elsewhere to come over. But, the market isn't always going to see it the same way as you do. And so one of the things that would certainly help HBAR is if it could just compete on the same ground with these other chains. If it could compete with these other ones that already exist and are offering yield, if it could do the same thing, then that would take a competitive advantage away from the competitors and then put HBAR on more of an equal ground on that particular dimension. So just to kind of wrap us up here, I just want to look a little bit more at HBAR's just price history over here on TradingView and just see where we are. And as I was mentioning, HBAR is pretty far off of its recent highs, right? We're about 60% down, or we've hit over 60% down at the most extreme. Currently, we're about 56% down from the all-time high that it put in. Now, one thing I do want to say though is that this is not unprecedented in HBAR's history, right? We've endured these kind of downtrends before, if not even more extreme. From the high going in the past all-time high going into the summer is about a 65% drawdown, or that's worse, around 70%. You can go back to some of these earlier points in HBAR's history where it's endured similar kind of drawdowns. So this isn't to say that HBAR is dead by any means at all. With or without proxy staking, it's not dead, I don't think. But what I do think is possible is that if HBAR had one of those mechanisms in place, we might not have seen such a rapid decline in the price like we just saw just over the past couple weeks here. We're down from just mid-November, we're down 50%. Around about a little bit above that currently where we stand right now. And so it's possible that if we had a bit more of a mechanism that was incentivizing people not to just sell, but maybe just hold and earn yield, that might have helped prevent HBAR from falling down to that degree. Now again, none of this is meant to be FUD against HBAR from a fundamental perspective in terms of technology or anything like that. It's just that I personally think that this decision to delay proxy staking has been potentially detrimental to the price of HBAR in the more short term. Now, obviously, once it's implemented, maybe that'll just rectify things. And if you're a long-term bull, maybe you just don't care. You're just going to be looking, maybe you actually like it that HBAR is falling as far as it is in price because you just want to acquire more before it might go up. And so if you have that perspective, maybe you're actually would prefer it that HBAR doesn't have proxy staking so you can scoop it up at a lower price. But I just think that in my personal opinion, I feel like proxy staking would have really helped HBAR in the shorter term, might have helped prevent it from this downturn. And in my own personal opinion, I think that proxy staking can't come soon enough. And when it does, that might be something that really kind of helps HBAR push itself into the next kind of category, kind of really push itself up further and help it compete with these other competing networks. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.